Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure to recognize two official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hi everyone, I'm Dong Jioxing, Tony. Now let's start today's group discussion. Good evening. First of all, let's take a look. The first headline today is durable goods orders remain strong. It's pretty rare these days, actually, that we can use economic data, whether it's good or bad, as a headline. That's really something special. Why is that? Because Powell didn't speak last night. He didn't really make any statements. So yesterday, the focus was on economic data. Also, the US stock market saw the dominance of the big players, which is pretty interesting. So let's take a look at these two topics. First, let's check this out. Yesterday's durable goods orders, as we mentioned before, because Boeing's aircraft orders were pretty strong, so we already had a good idea that the numbers would be very strong. The forecast was already at a 3.8% month-over-month increase. That's a pretty solid monthly growth. When the actual numbers were released, it was 5.3, so this figure is actually stronger than expected. Of course, we don't just say it's good simply because the number is higher. It's not like we just say it's good and leave it at that. The main point is, as for the new orders excluding transportation, the month-on-month growth was 0.5, which is better than the expected 0.3, so that's actually a pretty good result. Another key point is the core orders, excluding aircraft and also non-defense orders, which grew by 0.7 month-on-month. This is also better than expected, and in addition, as for the shipments of defense capital goods, this part also performed better than expected. This is quite important because this gets recorded under the investment component of GDP. So this means the GDP outlook is positive. Now, moving on, let's take a look at the details. As I mentioned before, the biggest increase in durable goods orders in 6 months for November mainly came from the commercial sector. The commercial sector was mainly driven by aircraft and other capital goods orders. Now, regarding this part, although this report is a bit delayed since it's the November report, which should have been released in December, and now it's already January, so it's a bit late. However, I still think the numbers released are pretty good, so let's look at them positively for now. Also, because yesterday, in fact, the market was actually waiting for this week's important corporate earnings reports and the Federal Reserve meeting, So people are generally viewing these numbers in a relatively positive light. All right, so yesterday, in fact, everything was on the rise. As for core capital goods, I just mentioned this to everyone. The main thing is we need to look at areas that include communications equipment, computers, machinery, electrical equipment, and so on. This is generally a sign of growth at the end of the month, and these numbers are actually pretty good. Now, there's something important I want to talk to everyone about. Even though this year we're seeing expectations of interest rate cuts, it will support economic growth, but the issue is with rate cuts. First, looking at the current expectations for rate cuts, I still think that this year's rate cut expectations will be higher than the one rate cut projection from the last Fed dot plot. But the problem is the change in rate cut expectations now isn't much more than just one rate cut. So in this environment, what becomes really important is the strength of economic growth itself. Because if, in an environment where the rate cuts are not significant, if economic growth is relatively strong, this will translate into a positive boost for the stock market. So I want to remind everyone to pay close attention to this. Now, why is that? Durable goods orders are doing well here. Let's take a look at what happened after the end of last year. Orders for core durable goods started to grow significantly at the end of last year. Actually, there's a very important point here. First, we can see that AI is driving another trend. The point is, as mentioned, the tax provisions in Trump's Big America Act include some open doors for corporate investment. So in this regard, it really does boost the willingness of American business owners to invest. Let me explain and add a bit more here. Trump, in this area, has his own unique approach to using tax incentives to drive corporate investment. During his first term, something people might not have noticed, actually, in his first term, it was after Obama had served for 8 years. After Trump took office, he made some adjustments to the tax laws. So at that time, investments did increase. Business owners' investments went up, and capital expenditures also increased. So just wanted to remind everyone of that. In his second term, he also made similar adjustments, although some things were wrapped up in a way that made people think there might be some overspending. These measures did encourage business owners to increase their capital expenditures. When it comes to equipment investment, this part actually was quite helpful. In addition, it's mentioned here that the increase in capital expenditure on communication equipment related to AI and human interaction has driven growth. So their AR should be a figure adjusted at the end of the year. That's why you see communication equipment, then telecom equipment and machinery, and then computers, which refers to electronic products, as well as basic raw materials, and this fabric metal product, which should be, I think, refined copper. Products related to non-ferrous metals, these are all growing. These are considered more mid to upstream investments. Seeing growth in this area means that if you look at the details, the momentum of growth is actually increasing. So what do we need to look at in November? Starting from December and January this year, as this tax bill has passed politically, and after the tax law is passed, the capital expenditure plans you make are for this year. You hope to see that after this calendar year, this year's equipment investments are still ongoing, and ideally, they're being carried out on a broad scale. This is good for the stock market. Now, if this is moving, then this year you might want to pay attention. Besides commodity stocks, which are very strong, not just because they include precious metals and base metals driving them, what else should you be looking at next? Within industrial stocks, who can pick up the momentum? This is very important. If industrial stocks are relatively strong, then you can see that the recovery momentum is stronger. The level of certainty will be higher. So we need to keep monitoring this. Next, let's look at a couple of other indices. For example, the Chicago Fed National Activity Index, it releases data for 2 months at a time. It went from minus 0.44 to minus 0.04. This means that economic activity across the United States may be picking up. In addition, the Dallas Fed Manufacturing Index rose to minus 1.2, which is better than the expected minus 8.5. Last month, it was minus 1.3. This is generally considered good news. However, keep in mind that there are 6 or 8 regional Fed manufacturing indices, and this only represents one of them. Specifically, it reflects the situation in Texas. Some of the regional indices are positive. Now, we should note that recently there's been a sector in the US that's been performing very strongly, though not many people have noticed it, and that's the energy sector. Oilfield services, major oil companies, and some niche oil firms have all been doing well lately. Of course, this may be related to the situation with Venezuela's controls, but we need to keep an eye on it. If the economy, specifically if manufacturing and oil company activities pick up, then the most direct and obvious sign of recovery will show up in the Dallas area. Why? Because that's Texas, after all. That's because there's a lot of oil there. And compared to, say, what used to be called the Gulf of Mexico, now called the American Gulf, this whole area is where they invest heavily, with lots of refineries and chemical plants concentrated there. If business activity in this sector is strong, it means the fastest recovery is likely happening there, and that's genuinely a good sign. On the other hand, but because the economic data is so strong, we have to recognize the downside. The expectation for interest rate cuts is actually continuing to shrink. The blue line represents a rate cut in June, and the brown line represents a rate cut in December, as we can see. So basically, the probability of more than one rate cut in the first half of this year is still decreasing. Although, well, the good news is that it hasn't continued to drop further, but it also hasn't started moving closer to just a single rate cut. And as for the 2 rate cuts expected by the end of the year, that hasn't exceeded expectations either, which is somewhat unfavorable. But let's take a look. Though first I should say, this is just the current situation, and it will change as time goes on and as new economic data is released. In principle, I still believe there should be room for more than 2 rate cuts this year, even though things look a bit conservative right now. But after the new Federal Reserve Chair takes office, even though the rate cuts may not be as large as what Trump wanted, there will still be a clear tendency toward cutting rates. So even if the cuts aren't as significant, the direction toward easing is still quite apparent. And in addition to that, we also saw yesterday, of course, I mentioned to everyone about that issue in Minneapolis. But what I want to say here is that yesterday, Trump didn't make any statements. I think he probably realized that this time the issue is quite serious. First of all, last week he was actually in Europe, in Davos, Switzerland. So after he came back, this incident suddenly happened. I think he probably needed some time to understand and process it. Okay, so this is quite a big issue because I feel like this time the actions of ICE have already crossed a red line. It's not just Democrats who think this has gone too far, even Republicans are starting to feel it's excessive now. Several people, I saw in the reports that some specific senators and representatives were mentioned. Senators like Ted Cruz and Cassidy, and then in the House, there's Mercy and McCall. There are also some governors, as well as some core MAGA members, all calling for a review of ICE's actions. They're calling for a review of a certain policy and its guidelines. Of course, the Democrats want to push for impeachment and even a government shutdown. Now, let me mention something. Yesterday, Trump didn't speak himself, but he did send his border czar Tom to Minneapolis. He went there on the 10th, saying he would take charge and coordinate, basically to manage the situation. Normally, besides sending the border czar, they might also send someone from the Department of Homeland Security, or even the Director of National Intelligence. So one is Kristi Noem, and the other is to see that Turkish person, Gabriel. His name's a bit hard to remember. I just forgot it for a moment. Anyway, both of them are women. Now, that's not to say women are less capable. It's just the two of them really seem a bit weaker when it comes to integration, not as strong as Tom Homan. Now, Homan is gone, and I think after he goes, there might be a more positive signal sent this time. Because if things aren't handled well this time, there's a good chance the federal government could partially shut down. Because actually, this Appropriations Committee, well, it looks like the Republicans don't have enough votes here. So they have a majority, but sometimes passing this bill doesn't just require a simple majority. Sometimes it's not quite 3/4, and it's a bit higher than 2/3. So it's not like you can just solve it with a simple majority. That means for some bills, both parties really have to reach a consensus before it can pass. And that's exactly the situation this time. So that's what we want to explain to everyone. This time, if things get really deadlocked, there's actually a chance that some parts of the federal government could really shut down. But there's something we want to point out. You can see that after the weekend, after the 23rd and 24th, after that deadly incident, if you look at the Holy Market Investment website, which is a collaboration with Bloomberg, you can see that the probability of a shutdown is hovering around 80%. Now, I want to point out that if the government shuts down this time because of this reason, it will actually hurt Trump. This is different from last year's government shutdown. Last year, when the government shut down, people felt that Trump had his own stance, and Republicans supported him and stood by his side. In the end, there was a compromise. Actually, this kind of situation is generally unfavorable for the party in power, but Trump still came out relatively stronger, just kept pushing it like that. But let me tell you, if the government really shuts down this time for this reason, it will be very unfavorable for Trump. It's also very unfavorable for his election, and it could be pretty bad for the financial markets too. Don't just assume that because last year, if the government really shuts down, don't think that just because the market went up after last year's shutdown, it'll definitely go up again this year, okay? It's not like that, okay? We really need to point this out. And this is something that's pretty hard to predict. You might just see a news report saying the government will shut down, and then by next Monday, it's already shut down. So please pay attention to this. Also, tonight's economic data is pretty important, especially consumer confidence. There will also be the release of the ADP weekly employment change. But let me talk about this first. Because previously, when the government shut down, everyone paid a lot of attention to this reference chart. But the problem is, ever since the release of the unemployment insurance claims data, its importance has dropped a lot. So the Federal Housing Agency's home price index, just take it as a reference. As for the Richmond Manufacturing Index, it's also just a regional manufacturing index, so it probably won't cause any major changes in the overall market. The main focus is still on consumer confidence. Why is that? That's just how it is in the US. If consumers keep spending, it will continue to drive the economy. But now you see high prices and the job market is kind of at a standstill. Will this continue? Whether the economy, specifically whether consumer spending can keep going, is really important, especially since January always after the Christmas holiday, which is the end of the year, from Thanksgiving to the end of the Christmas holiday, once that's over, the first month after, usually the numbers for January, people pay close attention to whether consumer spending can hold up. Basically, consumer confidence can give you a pretty good idea. It's a pretty good reference point, so everyone pays attention to it, especially since looking at the wording here, it's a bit convoluted. What I want to say is that basically what it means is that this could be, if things get better or worse, this is something where you really need to look at the trend over 2 or 3 months. It takes 2 or 3 months of data to be able to read the trend. So here, I'm basically telling you that you need to be patient and observe for a while. Okay, so I think keep watching, because after all, the state of the job market, whether it's good or bad, is currently pretty stagnant. What's more important is to assess after January, February, or even March this year, whether things will bounce back. That's the key point here. Well, as for another observation point, well, Taiwan has gotten colder today, right? In the US, previously, there was talk about the polar vortex bringing in cold air. Last week, it wasn't really expected to be this way, but it looks like I might owe an apology. On Tuesday last week, when I was filling in, what I said turned out to be wrong. So it seems that weather forecasts do have their merit after all. So what we saw was that last week, natural gas prices surged, and this week we're starting to see that severe weather has arrived. In many places, there's heavy snowfall. Some people are saying the snow has piled up to about 1 meter high, and when people jump into it, it's like, you'll just sink right in. It's really pretty bad weather. In a lot of places, airports have closed, and the roads are all iced over. But the Federal Reserve has said that their meeting on the 27th and 28th will still go on as planned. All this statistical data and various figures will be released according to the scheduled time, and the press conference will also go on as usual, so that's pretty clear. As for this time, of course, the expectation is that there won't be a rate cut, and the main thing is that everyone, especially at the press conference, will be asking about that. One of the questions will definitely be about the personnel issues at the Federal Reserve, including the part about Powell being sued, this criminal accusation against him. So this is probably where the market's main focus will be, likely on personnel-related matters. Now, let me also share a few pieces of international news with everyone. So, Canada said that it will not reach a comprehensive trade agreement with China. I specifically want to highlight the word comprehensive here. But the problem is, well, Canada will still make a lot of partial trade agreements with China. Why? Because actually, with Trump's stance on the USMCA and some of his other attitudes, Canada just doesn't trust the US right now. So getting closer to China is something they're definitely going to do. And look, in April, if Trump himself goes to China, if you go to China and sign your own deal with them, but then you don't let me sign one, that would just be ridiculous, right? Okay, moving on. About Venezuela's interim president. He said that Venezuela has had enough of US interference, but I think that's just a form of resistance. They're still going to keep interfering with you. And then this Thursday or Friday, the British Prime Minister, looks like it's Thursday, is supposed to go to China, so he's also saying he wants to. There will be like a publicity move for himself as well. And then the Norwegian government, well, you know, their $2.1 trillion sovereign wealth fund, they said the fund must step up preparations to deal with the growing risks of geopolitical tensions. Man, that was really a mouthful. Basically, they're telling the fund managers to get ready to adjust their positions. So where should they adjust? Honestly, the main source of uncertainty right now is the United States. So everyone really needs to know how to adjust their positions. The last bit is news. The EU and India on Tuesday are going to announce whether it's a trade agreement or something else. this could be a really important deal for Europe. All right, let's spend a minute talking about this part. Because in Taiwan, viewers or residents might not be very familiar with India. So let me mention something. Back in the British colonial era, India was called the jewel in the crown of the Queen. The British Queen's crown, the British King's crown, had a very large ruby on it. That ruby came from India, but the key point is that, aside from that gemstone, the most important thing was that, at the time, India provided a constant supply of goods, whether it was raw materials or semi-finished industrial products. They were continuously shipped to Britain, which gave Britain a very advantageous position in trade. In other words, India's resources provided a huge benefit to British trade. So much has passed over the years, and for India, well, it's still some distance away from replacing China, but for India, there's something it needs. For India's economy to keep growing, it still requires help from developed countries. In the past, it was the UK, but now the UK might not be able to do it. But the interesting thing is, if the EU steps in, that could be pretty significant. The EU could help solve some of the issues with raw materials and labor, and once those are addressed, there might also be new opportunities for product imports and exports. So I actually think this could be a positive development. Looking at future trends, this is actually news you should pay close attention to. For the EU and for India, this is a mutually needed and complementary relationship. This could even be more significant than the cooperation between Europe and China. It actually fits the real needs of the EU better. On another note, Trump this morning threatened to raise tariffs on Korean goods from 15 to 25 because, well, the Korean parliament has been dragging its feet. The agreement they reached with Korea, why has it taken so long and still hasn't been passed by the parliament? Of course, what we want to say is that we're not laughing at Korea or looking down on Korea. We're looking at Korea and thinking about Taiwan's own situation. When the time comes, the pressure for us to pass it won't be any less than what Korea is facing. Although I think we'll probably pass it pretty quickly too. If it really comes down to what the Americans want, I believe, yeah. Trust me, there's really no such thing as a blue-green divide here. Now, moving on, this page of international news is mainly talking about the Japanese yen, because actually, if you look at it, the US dollar, I'll show everyone in a bit, the US dollar has been really weak lately. Starting from last week, it's just been getting weaker and weaker. The main reason is that last Friday, there were reports that Japan might intervene in the foreign exchange market, although nothing has been officially confirmed yet. But most people think it's pretty much a sure thing. Why? Because on Sunday, actually, Besant mentioned that there had already been some kind of coordinated action, right? So Besant really did talk about the yen exchange rate, but Besant is the US Treasury Secretary, and when he talks about the yen exchange rate, everyone connects the dots and thinks, okay, the yen has depreciated so much, it's reached a point where it just can't go any lower. If even the US acknowledges this situation, then it makes sense for the market to reverse course and take some counteractive measures. We really need to pay special attention to this. Appreciation will still affect neighboring countries like Taiwan, South Korea, and the direction of the Chinese yuan. On another note, gold and silver prices were still very strong yesterday. As for gold prices, even though there was an upper shadow on the candlestick yesterday, today's market, the spot price, is still within the range of yesterday's upper shadow. Silver prices are showing a similar pattern. What we need to watch is whether today's close can stay at a relatively high level. It's not necessary for today to be exactly the same as before, and we're not expecting today to completely overtake Monday's high. But you can't leave another long upper shadow. If there's another long upper shadow, then the probability of a short-term top being reached is very high. We're just giving everyone a heads up, so you still need to pay close attention. Now, the second key point for today, why am I bringing this up? Turns out the US stock market also has its own dominant players. Why did I suddenly notice this yesterday? Well, it's because of a different kind of capital injection. First, Nvidia made an additional $2 billion investment, and then, of course, this means, Nvidia is helping CoreWeave by investing $2 billion to help them build more than 5 gigawatts of new AI computing power by 2030. This is basically about the situation with data centers. So let's talk about this first. Let's talk about the next sentence. On Monday, CoreWeave's stock price once surged by 17%, but Nvidia's stock price went up by less than 1%. Actually, there's another criticism, which is that people say this is just AI's cycle of financing and trading. But the thing is, Nvidia doing this isn't completely without reason. It actually has some significance. Nvidia wants to deploy a CPU under the Vera sub-brand. Let me say that again. They want to launch a CPU under the Vera brand. You heard that right. Nvidia, known for making GPUs, is now going to make CPUs. All right, so basically, Nvidia is gearing up to challenge and take a bite out of Intel and AMD's market share. That's why I think this is something worth paying attention to. And honestly, it kind of feels like Nvidia wants to turn this into a sort of showcase for their products. There's definitely a bit of that vibe. But let me tell you this. After all, they're planning to make CPUs. If they want to expand their CPU business, the best way is to use their own co-Wi-Fi platform for testing. If the results turn out well and you can see the performance for yourself, then their CPUs have a good chance of being adopted into customer solutions. Of course, this will impact the performance of Intel and AMD, so in the future, AMD and Intel will be facing even more competition. By the way, co-Wi-Fi ended up rising 5.7% yesterday. After Nvidia's investment announcement, Deutsche Bank actually upgraded co-Wi-Fi's rating from hold to buy. As for Intel, on Monday it actually dropped again, down another 5.72%. So to some extent, I think the pressure from competition is definitely there. The second reason is that its earnings report was really bad, so the stock went down. Let me say it again. In my mind, I call it the gold medal beggar. Whether it can regain its former glory or just keep begging depends on its fundamentals. You need to improve your fundamentals and have competitiveness if you want to be a gold medalist. Otherwise, you'll just keep begging. Also, yesterday, the second piece of news from the Cobra Group was that the US government is investing in USA Rare Earth, which is basically just called the American Rare Earth Company. They're investing $1.6 billion. So, of course, when this news came out, it was American Rare Earth surged, and although it later closed lower, it still maintained that gap and ended up rising 7.787%. Now, there's something I want to point out to everyone here, something to pay attention to. My interpretation of this news is that the Trump administration's team is very serious about solving the rare earth issue. Do they have determination and perseverance? You could say that, but it also feels like they're getting a bit desperate. There's a sense of urgency, but to me, it seems more like they genuinely want to make a breakthrough in the rare earth sector. So that's why they're taking these actions. Also, looking at MP Materials yesterday, this isn't the only rare earth company, but it's one of only 2 rare earth companies. So yesterday, after opening higher, it dropped by 8.82%. Wow, so I want to point out that the rare earth industry is not a good industry. Rare earth stocks might be good stocks, but the rare earth industry itself is not easy to profit from. Why? Because it has low gross margins. The products themselves do not have high margins. First, it is a high energy consuming industry, and it also comes with high pollution. And then, so the performance in this sector means that making money here isn't that easy. Just a reminder for everyone. However, the issue is that before production capacity is fully ramped up, when the market is in short supply and the US government is also in need, then it becomes a good stock. Jump in. And in addition, there were a few news items yesterday. The first one is about Micron Technology. This should be news that came out after the US market closed this year. They announced an additional investment of $24 billion in Singapore to expand their plant, specifically for producing NAND flash. So as for this, I think it's generally positive for the tech sector, especially for memory. First, this isn't just, so it's considered an expansion of capacity, but it's more of a gradual capacity expansion. What does that mean? HBM, it's currently increasing production, but it's being done in the US. After producing HBM, they shift some of the other products like DDR4, DDR5, or NAND flash to their overseas factories. They transfer production like this, and so far, I think, well, I hadn't really seen or heard of any Korean factories making any aggressive moves to expand. So up to now, I feel this is still a positive sign for the entire memory industry. That means for memory-related stocks, this news leans more toward the positive side. Let me just say, this is how I interpret the news, and I'm sharing my take with everyone. Also, regarding this new company, TikTok, things didn't get off to a good start. On Sunday, there was a power outage at their data center, which caused major equipment failures. I just wanted to let everyone know about this situation. What really surprised me is this new T version, which is the purely American version of TikTok. Surprisingly, OpenAI isn't involved in its operations at all, which I didn't expect. So I think we should take a closer look at this. Also, this actually came out during yesterday's trading session. Around midnight, at about 12 a.m., there was news that Microsoft is planning to launch its second-generation AI chip, which is pretty astonishing. Maya, the 200 series chip, and this means they're already starting to deploy it. Also, they've invited developers to use Maya's chip to run control software. So Microsoft is also preparing to make the next generation chip, the Maya 300. You can see here that the competition's starting to heat up a bit. The main thing we're seeing here is this new AI chip, which is really about reducing dependence on NVIDIA. So an important question is, will this have an impact on NVIDIA? And will it lead to more intense competition in the industry, with everyone going after each other? The main situation is that everyone is scrambling for supply. The key point is that these chips are still being produced by TSMC, but TSMC's production capacity is limited, so even though there's competition, I think that whatever supply people manage to get their hands on is still not enough. So for now, we probably don't need to worry about a situation where there's too much supply and everyone is undercutting each other. Now, is it a good thing that Microsoft is doing this? Yes, it is. Why is that? The design of these kinds of chips is generally a good thing for Taiwanese companies. Why? Because it gives Taiwanese chip designers a chance to get involved. And secondly, when you actually produce them later on, when it comes to tape out, more often than not, the tape out is done at TSMC. After you finish at TSMC, the next most important thing is packaging and testing. Sometimes, even if you can't secure enough capacity in the US, even if TSMC manufactures it in the US, you still have to ship it back to Taiwan for packaging and testing. So this is actually beneficial for Taiwanese companies. In principle, I think this is good news, especially for IC design companies. If they can keep up, or if the IP companies can keep up, you'll see some really positive results down the line, and that should make everyone pretty happy. So for today, July's financial reports, the more important ones we've highlighted, you can see. We'll get to those on the next page. The only one on this page that isn't highlighted is BA, which is Boeing. So Boeing, a few days ago, my eyes were a bit tired, so I didn't highlight it, but I want to mention it to everyone. Boeing's financial report hasn't been released yet. It's only coming out at 11 o'clock, so this data will be a bit late, and we can't really comment on it yet. So for this part here, I just need to update the numbers with the latest closing prices, but the actual stock performance and market commentary haven't come in yet. Let me first walk you through the numbers. So Kimberly-Clark, right? Their revenue came in lower than expected, but earnings were better, although those are adjusted earnings. And Kimberly-Clark, in case you're not familiar with them, let me give you two words, Shuji. Shuji is actually the parent company of that brand. So after hearing this, maybe it feels a bit more relatable to you, right? So this part actually looks a bit worse. It's not quite as expected. The revenue fell short of expectations. Let me talk about this first. After I finished sorting things out before the market opened, I noticed that among the pre-market announcements today, there was a small feature. The proportion of results falling short of expectations seemed a bit high. Another thing, United Health, yeah, you heard that right. Their revenue is huge at $113.215 billion. The actual figure in US dollars was announced, and it came in lower than expected. And when we look at the pre-market performance of individual stocks in a moment, there's even worse news coming up. Just wait and see. Now, as for United Airlines, their revenue is $13.99 billion, almost 14 billion, but it's still slightly below the 14 billion or 14.24 billion that was expected. And the actual earnings per share in dollars was also lower. The adjusted EPS didn't improve either. I think this could have a negative impact on its stock price. Now, Raytheon's situation is better. Their revenue and earnings are relatively strong. It's considered relatively good, but I remember there was another company, should be Northrop Grumman. Their earnings didn't meet expectations, so their stock dropped before the market opened. As for General Motors, their revenue was slightly below expectations. You see, this is yet another company that fell short of expectations. Wow. Then its actual earnings were a loss at negative 3.6, but after adjustments, it was 2.51, which is still better in comparison. Okay, so why am I explaining this? I want to take this opportunity to explain it to everyone in particular. Sometimes when you look at US company earnings reports, the media will report the adjusted EPS. But if you look at an example like General Motors, I tend to be a bit more conservative, so I look at the GAAP EPS because I feel that's more real. So you see, it's still a loss of 3.6, but after adjustments, it turns into a positive 2.51. That's something I don't really like. I just don't like this kind of situation. Like I said, I'm more conservative, so I consider it a loss. Just like everyone says, the conclusion for General Motors is that sometimes a lousy car company can actually be a great stock. Now, the next one is pretty important. United Parcel Service, or UPS. You know, those yellow UPS trucks. Their actual revenue was really good, $24.5 billion, which is better than the expected $23.99 billion. As for profit, it was just a little short, only off by $210 million, slightly below expectations, but their adjusted numbers look better. I especially want to mention this. So why is UPS particularly important? Because this is the fourth quarter, and the fourth quarter happens to be the peak season for consumer spending in the US. So this covers the most important consumer activity, the situation during the Christmas shopping season. If the situation with their package deliveries is looking good, then you'd expect the GDP for the fourth quarter to be more positive. That's also why, when the fourth quarter GDP was announced last time, it was better than expected. Now, let's talk a bit more about this. In the US, well, the market will also be directly influenced by news from UPS. Besides UPS, the other major player is FedEx. These two are the main delivery companies in the US. DHL is European. Also, Northrop Grumman, you can see that their estimated earnings looked good, and the actual earnings seem even better. But the problem is, its annual earnings, I remember seeing in the pre-market news that they were below expectations. So even though its revenue and earnings look okay, the annual earnings didn't meet the target. That's why it was probably dropping in pre-market trading. Another one is the healthcare company HCA, which is its performance was better than expected, but revenue was slightly below expectations. Then there's Nucor, which is a steel stock. Looking at its revenue, it also missed expectations, and its earnings were also below expectations. Same with the adjusted numbers. So you can see, here's another company with revenue falling short of expectations. So what we need to mention is that this year, looking at the financial reports being released, it seems like more of them are revenues that are falling short of expectations. Also, Boeing will be reporting a bit later, and after hours, we'll see results from Texas Instruments and Seagate. As for Texas Instruments, of course, they're focused on mature chips, so compared to ICs, Texas Instruments is basically the top player, right? So actually, you can think of them as automotive chips, like chips for cars or other mature application chips. These are what Texas Instruments focuses on. So for this segment, their projected revenue, I think this might be the bottom. Let's see if there's a chance it starts to move up from here, right? But personally, I'm not holding out too much hope, even though auto stocks have been moving, because I feel that the outlook going forward still isn't that great. Now, another thing, Seagate, okay, this is pretty important. Why invest in Seagate? Oh, right, SanDisk should actually be WDC. Sorry about that. Seagate has been following They've been following Micron's lead, which is driving the memory sector forward. So here, let's look at whether their announced financial report is keeping up. This is very important, and we'll take a look at that in a moment. It seems like Micron and SanDisk's indexes over the past couple of days, their stock performance looks like it's taken a bit of a breather. Now, Baker Hughes, which announced earnings yesterday, is still doing very well. Did you see that Chairman Zhao's 4.4, right? The actual revenue was higher than expected, and the EPS also beat expectations. In other words, their financial report was pretty good. From what I remember, their outlook's pretty positive, which means the oil field sector should gradually recover, so things are slowly trending upward here. I want to especially remind everyone that if a trend emerges in the US stock market, it usually lasts for a while, okay? So things aren't looking so good for the steel and copper sectors. That is, their revenue and earnings. Revenue came in below expectations, while earnings were actually better than expected. But the problem is that revenue missed expectations. So after opening higher yesterday, it ended up closing with a big red candlestick. So steel stocks are still relatively weak. Oh, and just to add, USS Steel, that is United States Steel, just announced their results today, and Nucor, which is also a major American steel company, did the same. Their revenues also came in below expectations. Now, what's interesting is that US Steel, this company, mentioned in its earnings call that it's preparing, or rather it's planning, to enter the rare earth refining business. If I see any updates in the next few days, I can share more details with everyone about their progress. I think it's actually not that surprising for a steel company to get into rare earths, since it's all in the mining sector, so they do have relevant experience. So I think we should keep watching this area. Why? Because actually, raw material stocks have been getting a lot of attention lately. If there's good news for industrial metals, it should have a relatively positive and beneficial impact on their stock prices. Let's quickly take a look at the indices, because we still need to check out some individual stocks in a bit. There's also a trend I want to share with everyone. First, the S&P was up 0.5%, and certain sectors performed well. Yesterday, in fact, the communication sector, especially the Magnificent Seven, started to bounce back. This is a bit of a teaser for what's coming up. The Magnificent Seven are showing signs of coming back to life. Next, let's take a look at some individual stocks. As for volatility, yesterday it went up, and the S&P 500 was up by 0.23%. But what's more important to note is the Dow Jones here. It looks like the Dow has managed to hold above the 20-day moving average since it closed higher yesterday. If today also ends with a strong upward candle, that would be even better. The Nasdaq is also up, and the Magnificent Seven are still on the rise. This is really important because it means they've basically stabilized around the 34,000 point consolidation range. Ideally, we'd see another long bullish candle to really pull out that upward trend. If that's not possible, at the very least, we need to hold the 34,000 level as a psychological support. And there's one more thing. What I want to say is, first, as we mentioned yesterday, Apple needs a bullish reversal candle to change its trend. The thing is, yesterday we did see a strong bullish K-line, which is good news, but it's not quite good enough. The first thing is, if here, a better development would be for it to consolidate and then move upward. What you want to see is a V-shaped reversal, directly breaking above the short-term moving averages and then kicking off another round of gains, unless there's some major positive news. But theoretically, Apple should be entering its off-season around this time, so this scenario is more... Expecting a period of consolidation is more reasonable. As for Facebook, it has surged significantly, so that's good news. The bottom here is relatively... This forms an opportunity, but the main point is that after hours on the 29th, the earnings report will be released. Alright, so the good news should be shared with everyone. Right, but there's something a bit unexpected. Well, maybe not unexpected, but there's a part that we need to pay attention to. Because they've shifted jobs and invested in OpenAI. Now, even though OpenAI is a company that will go public, it hasn't released its financial reports. But the issue is that Facebook has to disclose information related to its OpenAI financial statements, like whether they need to recognize any losses or something like that. You can see this aspect from here. Some people say that when it dropped before and then consolidated for a while, that period was actually reflecting this issue. So if we look at the actual disclosures, did that part actually get revealed? If it wasn't disclosed, let's take another look at the market's reaction. Could it be that after this part stabilized, it became relatively good news for Facebook's position? Also, Microsoft went up yesterday, but Google was still down yesterday. Sorry, it was down on Monday, not Friday. On Monday, it was down 0.79%. But the thing is, I still think Google is the best performer and has the most potential among the 7 AI giants. It's possible that as soon as some good news comes in, it could trigger a new wave of performance for them. However, their earnings report won't be released until next week. Amazon will also be releasing its earnings report next week. It'll be announced after the market closes on Thursday. Right now, it's basically moving sideways. As for Nvidia, its earnings will be released a bit later, so the exact timing hasn't been set yet. For now, it's also trading sideways, and will need some other catalyst to move. The catalyst here doesn't just refer to the earnings report. Maybe there will be some other positive news. Previously, when China opened up the H200, it didn't really make much of a splash, which is a bit of a shame. So we don't know if there will be any other news that could drive Nvidia's performance. Tesla dropped yesterday, and it was quite a big drop, down 3.09%. But Tesla has always been pretty volatile. Basically, it's still fluctuating at a high level right now, so we'll have to see what positive factors come up next. As for the Philadelphia Semiconductor Index, on Monday, it was down by 0.39%. Now, as for semiconductor stocks, they performed relatively well yesterday. Companies related to chips like Global Foundries, Lam Research, and KLA did pretty well. But Intel dropped more, and AMD was also down. Ultralab was also down. Now, pay attention to Micron. We saw that last Friday. It left a red candlestick with a relatively long upper shadow. Yesterday, it went down. Today is pretty important. If it continues to fall today, it's possible that memory stocks will pause and wait around this level. Why is that? The money might flow back to the previous Magnificent Seven stocks, which have been consolidating for a while, like Microsoft, Meta, and so on. They've been trading sideways for a bit, and with earnings reports coming up, if the market feels the results aren't that bad, funds might rotate back in. So this is another point I wanted to share with everyone, and something to keep an eye on. Now, as for SanDisk, you can see that compared to Micron the day before, so just like with Micron, last Friday, Micron left an upper shadow on the candlestick, basically signaling, okay, and then yesterday it continued to drop. So you need to pay attention and watch tonight's market. If this part continues to fall, it's possible that US memory stocks might take a breather. You should also pay attention to the linkage. If you're more involved in Taiwan stocks, check how the corresponding stocks in Taiwan are performing. Why do I say this? Take Avago, for example. It went up 1.5% yesterday. Avago's earnings report comes out a bit later, but it's kind of following the same pattern as Microsoft and Facebook. After a period of correction, you see a big bullish candlestick, something similar to that. As for AMD, it's been dropping, but it's the same thing. I think with AMD, we just need to keep waiting. I think it's still okay. As for Oracle, it went up yesterday, but mainly it's still being held down by the 50-day moving average. I think it's still going to take some time. The US dollar is still very weak, as we'll see in a moment. US Treasury bonds are still falling. The US 10-year Treasury is dropping. Next, let's move on to the next topic. Let's take a look at Bimber's pre-market performance on this screen. Let's look at this first, As for the futures, they're still maintaining an upward trend. It seems like the tech stocks are still looking pretty optimistic today, but the Dow Jones is still trending down. Like I mentioned before, it's possible that since the Magnificent Seven have been consolidating for a while, and now that some people are starting to take a stance, funds might keep flowing into this area even before the earnings reports are released. Making an adjustment. Now, let's take a look at the pre-market situation. All right, GW and then LW. This is Corning Glass, right? So it has a $6 billion investment with Facebook. There's a $6 billion order. It's for Facebook's data center, a $6 billion order. But what kind of glass is it? We need to check. Not sure if it's related to optical communications. Then there's HCA. It's gone up, but it looks like, well, aside from that, the rest of the health insurance sector isn't doing well. Over here at CoStar, it's a bit better. This seems to be related to Thai Airways or something like that. As for Invesco, it's investing in EM, which is up. Which one is good? Anyway, I think we can look at this later. For Micron, the news from Singapore has pushed its pre-market price up by 3.86%. The technicals might be a bit weak, but there's good news, and the market is responding positively, so that's good. RTS is doing relatively well, Raytheon is also performing well, and Intel seems to be stabilizing a bit. UPS is showing pretty good performance, and then SY1, I forgot which company that is. Salesforce is also reacting. Crossrite, And then looking at Datadog, it seems like software stocks are also showing some performance. WDC, because CK is about to announce earnings, so there's a comparison there. It's a similar situation, and looking at the pre-market performance of tech stocks this year, it's actually been pretty good. So today, it's possible that tech stocks will continue to perform well, and today's performance might be similar to what we just saw with the futures. Also, did you notice? These are all dropping quite a bit, and they're all healthcare stocks. Then there's Humana, United, and Sales. United Health, and also CVS, the pharmacy chain. Their stock prices have recently experienced a significant and sharp plunge primarily because the newly announced Medicare Advantage reimbursement rates are considerably lower than what investors had originally expected, so that is the fundamental reason why we are seeing such a dramatic sell-off across the healthcare sector today. It's quite weak. For United Health, this is the first time in 30 years that their annual premium income has declined, so of course the drop is more significant. And then the fee standards for 2026 and 2027 that were just announced are also below expectations, so this sector is relatively weak. That's why you see Humana and CVS both dropped more than 10%. Whoa, let me tell you, this is probably because Trump is running for election, so there's some pressure on the insurance premiums. Why? Because insurance premiums really matter to Americans. Insurance is a really big deal. If you've ever lived in the US, you know how scary insurance can be. Car insurance, homeowners insurance, health insurance, they can really crush you. That's why these stocks took such a big hit. Also, there's something notable today. Just now, we saw some decent gains, but the declines today also look pretty significant. And Cigna, if I remember correctly, that's also a health insurance company. Then there's Northrop Grumman, this one too. The year profit outlook refers to the annual forecast. The revenue outlook for the year didn't meet expectations. Not last year, but this year's performance fell short of what was expected. Local revenue fell because it was lower than expected in the fourth quarter of last year. We also see that Boeing's performance was relatively poor because cash sales, the cash flow and operating performance are good, but the stock price is not. Okay, so let's take a look. It's roughly like this. The US dollar is still weak and falling locally, while US Treasury bonds are not trading sideways. In fact, US Treasury bonds are trending upwards. Be careful. If the government really shuts down, US interest rates will rise. That's right. Well, the confidence in the US is relatively weak, which leads to a situation where bond yields are rising. And at 9:15, the ADP America's employment report was released, and it came in at 7.75%, which is rather bad. So it seems a bid week is still a good thing. Let's move on to the next one. Let's take a look at everyone's questions. There aren't too many questions today. You should come have coffee with us in the evening. Oh, sorry, this is a coffee mug, but I'm actually drinking water. I usually have a cup of coffee at noon, and after I finish, I just refill the mug with hot water instead of washing it. That way, I don't have to wash the cup. Alright, so that's pretty much how it is. So looking at today, it seems like the stock market's reaction is going to be pretty similar to how the futures performed. The transmission-related stocks are They're a bit affected, and funds are moving toward tech stocks that had been consolidating for a while. This continues the trend we saw yesterday, on Monday, so let's keep an eye on that. The earnings reports from some of the big players on Wednesday, these will be released after the market closes. Will they be able to meet the market's expectations? Alright, that's about it. If there are no new questions, we'll wrap up today's live stream here. Okay, see you all tomorrow.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.